If you are wondering, should I pull my retirement out of the stock market? Then today's video is for you. I know it can be a struggle to decide if you should be pulling all of your money out of the stock market for retirement, or if you should pull out a small amount, or pull out some at the beginning of the year or the end of the year. There are many different options, so let's talk about the best way to do this. I am Tiffany Thomas, your wealth mentor. I achieved financial freedom in my 30s and became a millionaire at 40. I'm here to help you do that even earlier and easier, so let's dive right in. All right, whether we are retiring early or retiring at an older age, we often wonder, should I pull my retirement out of the stock market? Retirement planning is definitely a delicate balance. We want to still have enough risk, but we also want to de-risk. So let's talk about how we can do this in the best way possible, and I will share what I have been able to do. All right, one perspective that we can take a look at is that when we are older and we are retired, that we want to reduce our risk. So we want to pull money out of the stock market. And depending on how risky we want to be, we may want to pull out a smaller amount and live off of that for a year and then pull out some more. Or we could do it at 3 years at a time, depending on how much we still want to grow our wealth, or if we just want to preserve our wealth. If we're able to still keep some money in the stock market, then it is going to grow over the long term. But of course, if we are needing that money right away, it is hard to pull that money out when we have seen it drop significantly. We want to make sure that we are still getting enough risk so that we can stay above inflation with our investments, but also not have too much risk so that we aren't losing a lot of our investment amount by pulling it out. The way I like to look at this is realize that by investing in stocks, we are growing our wealth. And by investing in bonds, we are preserving our wealth. So we can honestly leave the majority of our money in the stock market, but we can switch over some of the money from stocks to bonds if we're looking to preserve our wealth during retirement. For me personally, since I invest in the stock market and in real estate, I have cash flow coming in from my real estate properties, so I don't need any cash flow from my stock market investments right now. So I've chosen to continue to grow my wealth. So I'm only invested in stocks inside of the stock market. I do not have any bonds because I still want that increase for my investments. I'm not looking to just preserve my wealth. And of course, that's not the case for everyone. If you just have your stock market investments and you are retired, you may want to put some of that into bonds so that you know for sure it's being preserved. And also, while we are in our retirement years, we don't want to just take all of our money out of the stock market and put it in a savings account, because we still want it to grow so that we can live off of it during our retirement years. Unless you have so much money in there that you don't need any more money, then you could pull it all out and put it in a savings account. But I feel like for most people, that's not the case. They would still need to build their wealth a little bit. So they would want to leave it in the stock market and make more with stocks and bonds rather than just sitting in a savings account. And then whether or not to pull out your money at a year at a time or maybe quarterly, it's honestly up to you. It is a personal preference. If you feel like you want to just feel secure and have that full year's worth of expenses, then you could pull it all out at once at the beginning of the year or even at the end of the year for the next year. But if you're thinking, well, I still want it to grow over time and I'm willing to have a little bit more risk, then you could pull it out just for a quarter, for a few months at a time. Or you could even just go in the middle and you could do 6 months worth of expenses. Or if you want to be a little more hands-on and you can see when your investments are up pretty high, then maybe you do pull out more at that time that you could live off of. And if they are down at that time, maybe you try to leave a little more in there, but also realizing that they could drop even further. So honestly, there's not just one way to pull money out for retirement. We just want to consider how much risk are we wanting to have, how much growth do we still want to have, and how much do we want to just preserve our wealth, and then what is going to help us sleep at night. if we are able to just pull out a full year's worth of expenses, or 6 months, or even every quarter. But the more money we are able to leave in the stock market, then the more it is going to grow over that longer term. So take into consideration your time horizon. Maybe if you are not retired early and you are in your 80s or 90s, and you know you have a less amount of time to live, then you may want to just start pulling that money out. But if you did retire early, then you may want to leave the majority in stocks so that it can continue to grow over the years. Just a few tips to give you on how to make an informed decision. The first thing, we want to review our risk tolerance, right? How risky are we willing to be? If we see our investments drop significantly, are we going to be okay with that, or are we not? And then the second tip is to make sure that we diversify according to our own situation. We don't want to have so much in bonds that we aren't going to be able to grow our wealth if we retired early. Or if we have already lived a really long life, then we probably don't want as much in stocks because we don't want to be growing that wealth. We would rather be preserving that wealth. And then the third item, make sure that you can sleep at night. If you are so worried about your investments and stressing about that, then make adjustments accordingly so that you can sleep at night. And when all is said and done, there's no perfect way to pull your retirement out of the stock market. It really depends on your personal situation, but these are just a few factors to consider. And if you are thinking, I really would like to retire one day and I know I need to be investing in the stock market, and I want to get started with that or be better at that, I have a free masterclass where I go over how I can help you invest in the stock market. I will leave a link below in the description. You can click on that and check out the free masterclass. And just to go along with pulling money out during retirement, the more flexible that we can be, then the better off we are going to be with our investments. If we can get a part-time job, or if we can sell a few items, or even reduce our expenses, then the less we have to worry about getting the exact percentage of stocks and bonds and knowing exactly when to pull things out. So try to be a little flexible during retirement. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel, and hit the little bell to get notified on when I post new videos. And if you want to see even more amazing content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.